Hello, thanks, Scott. Sorry for lapping in the open mic there. I just saw Jeff's comment about my hair on the Summit stream. Hello, Andy.
Hey, Steve. Hey, Scott.
Hey, everybody. Thank you, Jeff. Welcome to the trade of the week. I can't believe another week has again flown by, but here we are. Didn't seem like much of a weekend because we had a busy trade ideas weekend. We had meet and greet Friday, and the great summit went off without a hitch. And Saturday, and then spent all day Sunday on the golf course with Dan strategizing and into the evening. So here we are back again on Tuesday, kind of back in the groove, and we're going to talk about the trade of the week. So let's get started. All right, so just a reminder, the disclaimer, we are a software as a subscription company. We're not registered advisors, we're not financial analysts, and we're certainly not money managers. So anything you see or hear is really just our opinion, our own observations, not to be taken as financial advice, of course. All right, so this is where I remind everybody we've been around for about 15 years now, and there's a lot to this program. It's not something you can learn overnight. Even in just a few days. And so most of the people take advantage of our promo codes, and they use that first 30-day month trial to really get a good feel for it. And some of the ways in which we try and help shorten the learning curve of our very advanced, rich product are these items here. Barry's live trading room, Monday through Friday, hundreds of people in there, a couple of really good traders, and Barry himself also. Showing what he's doing live, and more importantly, demonstrating the Trade Ideas platform for people who have a question all the time. Barry reminds us to send people into his room that might have a question, and he can certainly demonstrate it live. Don't be shy to show up, and it doesn't cost any money, which is also a pretty good deal because free is a good price. So we have the live trading room, pretty much bell to bell. Sometimes Barry will leave in the last hour if things are really slow. But we have the afternoon webinars, such as we're speaking with you now, all the way Monday through Thursday, except Friday. On Friday, people are heading out. So we have what we do as a 3-hour, 2 to 3 hour, depends on the activity, live technical support, just like we're doing right now. It's a go-to webinar format. And people come in with certain questions and helps with scans or help understanding the program, or can we or can't we do what they want to do. And it's a great place to pull up a chair and get help for free. If you need it and you're not aware of it, please come by on Friday support sessions, 11 to 2 Eastern. And then we have the Trade Ideas University, which for now, it's still live, but it may go to an evergreen situation soon. We also have a playlist also that's pre-recorded, because what's happening is a lot of people show up for the Monday episode, and then they get ahead of themselves. And I admit I'd be doing the same thing. I'd be watching the Tuesday, Wednesday, and Thursday recorded webinar probably on the Monday night, trying to get ahead of myself. And so people do that, but still, until further notice, we are there in a live format Monday through Thursday in the Trade Ideas University to help people understand the basic stuff during the beginning of the week, and then towards the end of the week, the more advanced stuff like back testing and optimization and things like that. And so it's really reminded me at the summit, this slide looks extremely familiar, and I will give Brian Shannon credit. I did steal it from him about 2 years ago and even asked his permission first, so I'm all good there. I don't think I owe him any licensing fees, because it's a real pertinent theme that as we go forward in the future, it's not all machine. It's just not going to be that simple. The human and the machine are going to work together, where the machine, the technologies, the algorithms, the AI, what have you, bring us a curated list of data, parsing through giant data and giving us the list that we want to look at. And it's always going to be up to the human being to finally make that discretionary decision. And it's going to go across all facets. And of course, we're talking about stocks and technology. So that's always going to be the theme, to remind people that Trade Ideas is an excellent software platform, technology, what have you, whether you're using the AI for ideas if you're not sure what you're looking for, or if you are sure what you're looking for, you're using our scans to bring out the best of them, bring them to the top, and use that technology together with your own discernment. All right, so enough of that. We'll get started here. What we're going to do today is just kind of the same formula we've had many times over. I'll do a little market recap here. Andy will talk about what the AI did today. Trade of the week did trigger today, and it was a unique one, so we'll kind of walk through that in time, and we'll take a look at the sectors, kind of see where the market or the sectors rather finished out today. I haven't even looked at them yet, so we'll do that kind of cold turkey together. Go over last week's alerts. I said a few last week and maybe talk about them, and then I've got 6 or 7 maybe again for today, and that's kind of the format. So let us get started here. Yes, David, I asked permission, so he's all cool with it. He owes me a few favors as it is. We won't get into that. All right, so let's bring up the SPY. This is what I like to start with. And, I'll start with what Andy's talked a lot about lately is we get up here into the stratosphere where the air gets a little thin. Remember we talked about, moving higher, and as it was kind of a cup and handle. This market is moving higher, but as Andy points out, it has a hard time closing on highs. So if you look at the last 2 days here, we've made a little noise, but there's been a little bit of turbulence up here at these levels, and there's a gap right here as well, and we also have this rising 10 period. So, honestly, anything goes up in this level. It's kind of very, very dicey. A couple of reversing wicks as well. So I think tomorrow could be a very sloppy, choppy day where we just might try and find a way to gravitate into this gap and find a way to touch this moving average again. But for the most part, look how the moving averages are all fanning out now, just like we want them to see them again. The price action is again supportive. So we're back in that land, which we've been in a few times and before it fails, but who knows if it's going to fail this time. But we have to respect it, and that means, you probably shouldn't be trying to play the short side of things, because if you're trying to play the short side of things, you're maybe going against the backdrop of the general market, and you're just hoping for that big black swan event, bad earnings or what have you. Certainly nothing wrong with playing earnings to the short side once that happens, but I'm just talking about the general backdrop of the market. The path of least resistance remains up, and that's what we want to look for. So it looks as if the market, S&P rather, has resolved itself since we last spoke, and it's resolved itself to the upside, kind of as we thought, as the price action was being supported last week. Take a look here at Qs, and they're already starting to give a little bit back. There's a lot more red in the Qs, but then again, we could make a case that as they broke out here, they got ahead of the rest of the market, probably got a bit ahead of themselves. They've filled almost the gap from Friday, but there's still a little bit of work possibly to be done. So, as far as the backdrop goes, this is not the kind of backdrop I would like to, initiate new positions. It might be interesting to maybe let the market come back a little bit and dig in, because that's really where we're gonna, let's see if we draw that line. It might be a perfect reversion back here to the pivot. And what I mean is resistance, 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 breakthrough, come back, test the resistance, and what do you know? It might be a perfect destiny with that moving average and the pivot line really bringing some solid support into this level right here. So that still might be a day away. So if you're a day trader and you're trying to trade the market to the long side tomorrow, if you see a lot of red, it's probably just the market correcting into what it normally should do. You've heard me say market doesn't really want to go more than a day and a half before it finds a way to start taking profits and go back into consolidation mode, whether it's an individual stock name or the market in general. Yeah, we'll go to the IWM, why not? Again, it's slowly grinding its way higher. The last time we spoke, it was stuck back here kind of in no man's land, and I said that because if we look at the bigger picture here, it's been a very long grinding range, except for this volatility back here. But if the general markets continue to move higher, this is more than likely going to try and find a way. I'm just going to eyeball this interesting level here. There's a little bit of slop back here, but for the most part, these are the levels that it just can't touch and get through. So coming back up on it, I mean, I don't want to get 4 steps ahead of myself, but we could come through and then touch it and then do the old cup and handle, and then the small caps, Russell 2000, IWM could be off to the races. Again, this is 7 steps down the road, but if all other things remain, constructive, this is where the big money managers are going to try and get their separation from performance, because you can just buy indexes all day long. You're never going to get separation, and that's how they get paid, and that's how they attract attention to their fund, is when the big indexes are X and your performance is X plus plus because you've got some separation. Well, what I'm saying is that might be where the big funds might look to. So 2 things. There's that notion, that fear of missing out and that fear of performance they're going to want to get. And it's backed up with a huge technical reason right there. That's a giant range. And if IWM breaks out of this range, there was going to be a lot of attention paid to it. So I kind of look forward to the day where maybe that does happen and we can talk about that rather than every time we pull up the IWM talking about how it just kind of sucks and brings up the rear. And then lastly, the Dow, interestingly, did not break up into new highs like the S&P and NASDAQ did, but it's still showing constructive movement out of this little wedge here that I just haphazardly drew. As long as the price action stays outside this wedge and moves higher, that one should be okay as well. So I think the big takeaway is here we saw we saw that the bulls are still in control. However, Andy's thesis that the air is a little thin up here. Let's just see, this level really should be holding. Eyeballing that there in the S&P, and then the level that we saw in the NASDAQ in the Qs was extremely significant. So probably really be watching this level closely, whatever level that is where I just drew that X, because it's a pivot and that moving average is going to come right into play. So that's all I'm really seeing at the moment, Andy, unless you want to chime in on anything.
No, I agree with everything you said there, Steve. Obviously, the Qs today probably a little bit weaker because of Google's earnings and didn't perform very well today. But yeah, same applies. We need to see some follow through. The SPY is actually held up, but we'll see what happens. Only time will tell. But yeah, not seeing a lot of umph yet, but let's see. Like I said, the one thing we have going for us, I think we didn't have in the last couple of times, was just earnings. I think if anything's going to power us through, a lot of the semis are coming through with great earnings. So we'll see what happens. So, but yeah, you pretty much hit everything else perfectly there.
There's the semis. Look at that. Okay, don't be buying semis tomorrow, okay, guys? You see, there's a nice doji, a nice move off the doji, another nice move, and a beautiful third day move off the doji for the SMHs. We'll come back and look at the sector later, but a big old wick at the top, and it's time for a rest over there in the semis. I'm not saying short them because you don't want to short something that's strong, but at least back off the accelerator a little bit if you're trying to buy semis, and look what the bigger picture is showing you there. Hopefully you guys can see that.
Yeah, they should be able to see it. All right, Steve, I shall grab it unless you have anything else to add.
Go ahead.
All right. Okay, let's talk about Holly a little bit, guys. First of all, let's pull up the market. You just saw the Qs there on my screen, and here's took a look at the SPY, and this is kind of what Holly had to work with. Remember, for now, we are working on some swing stuff right now. So, but for right now, Holly gets out of every trade by the end of the day. And I say it's a trade, it's an alert. Of course, if you're trading and it's a trade, but Holly does exit everything before the end of the day. So, theoretically, it is a day trader, I guess you'd say. Doesn't mean you have to day trade the positions. So a lot of times I find some interesting stuff on a longer term, time frame. Anyway, let's talk about how she performed today. And one thing, guys, I know you've been seeing a lot of, and this is going to be rectified soon, is these multiple orders. Now, if they're on a different strategy, that's okay. But when you see them in the same strategy, it means they're being fired from two different segments. And our goal is in the near future to go back to one Holly. And then we have a new Holly that's going to be interesting, looking for more volume plays. Michael Noss is working on, and then hopefully some swing stuff for you guys. So we got a lot of things coming, but for right now, it's kind of it could actually be unfair in both directions, because you can have a loser like this PD down here, which had duplicate orders that was a loser. But you're seeing some duplicate orders, and I have a hard time pumping the overall numbers when you have some duplicates in there. Now, that doesn't mean there were not some great calls by Holly today. I'm going to point out a couple here. And overall, even if you do take out the duplicates, it performed well. All you have to do is look at, let me slide this up just a little bit here. it's even number in risk off mode for the ones that had a profit, and the ones that had a loss did have a few stop hits down here, but you had some ones with some really big numbers here. $800 risk off, $700. Now this is based upon my allotment of shares. Okay, I have mine set up based upon a stop loss of $200. So in other words, if it does go down to the stop, I will lose at a max. You can see down here, $200. So it calculates automatically. This is really a great feature, man. It goes out and buys the number of shares based upon your stop loss parameters. So you can see here, it did perform much better in both risk off and risk on. And boy, look at this one right here in risk on. This is STOK. This would have to be the trade of the day from Holly. Just a beautiful little breakout, no pain trade. What I mean by that, you get the signal and it never really goes against you. It just goes up nicely. And wasn't that a beautiful trade? You had a chance to get out here for an incredible. Now Holly got out on what's called profit save for a small winner. Man and machine. You can look over here and say, well, I'm not seeing a lot of resistance. I'm seeing just, a couple of data points over here, but nothing that's setting up what's called a pivot level or anything like that, just a single data points. So you might say, well, I'm just going to see how far this baby can run, and boy, did it. So that was the trade of the day, but look at work here, WORK, okay, another one. This was a multiple entry, one for breakout and one for nice chart. The breakout was a little bit earlier. Obviously, here's your nice chart buy up, but either one of them would have worked. This one obviously gave you a lot more bang for your buck since it was an early breakout call, but a nice trade there. And then, of course, did have a few stops, but once again, looking at this should tell you, guys, it's all about risk management. Okay, you had an even number, and this is what trading is all about. Even, this is 28 trades today, but you can apply this to your own trade, risk management, and this is how you make money, okay, is you let your winners run, okay, even though we're in risk off mode, cut your losers, let your winners run. You had about 9 winners here and 9 losers, but you could have had an incredible day just by letting your losers go and keeping your winners. That's what trading is all about, okay? A lot of people think you have to have a certain percentage of wins. You got to be, have a 70%, 60% winning percentage. No, it's all about your
tending your garden.
Your profit to loss ratio. Exactly, like Steve says, tending your garden. So anyway, Steve, I wanted to point out those couple of trades. Other than that, the rest of them are pretty, pretty even, as far as losses versus winners. But boy, there was a couple of really good opportunities there for a couple of trades. I'll shoot it back to you.
All right. Hopefully the jets stop flying again.
You have something to add?
No.
Okay.
No. I agree with you. Just yeah, exactly. That was the story today. Cut your losers and let your winners go. It's hard to do. We all know it's super hard to do, but that's in the end what it comes down to. Matter of fact, one of the big takeaways I got from the summit this weekend, if anybody watches the replay, there was a chartist on there talking about risk reward, and he said 1 to 1.6. If you can just risk 1 to make 1.6, you're in the ball game and you're going to start making progress. So, risk 1 to make 2 is a nice round number, but interesting looking at his data that he came up with 1.6 is kind of the baseline at which that starts. So anyway, so let's go back and go ahead.
Let's answer Kelly's question.
Oh, I didn't even see Kelly's question.
No. Kelly, you can. What I did, you saw mine was set on $200.
You want to read the question?
Okay, that's a good idea. Can you back test with different risk levels, like changing the max? Kelly, when it comes to the AI, there's no input. You cannot back test it. But what you can do is, and Steve will show you where you can do this. Show her where she can manage her AI trade size, Steve. Like I had mine set for 200. he's showing you there. You just go to options and go to AI trade size. Steve is set. So when you look at Steve's, his is set at 100 max loss, just like you want to do. But you cannot go back and back test any of the strategies in the AI. You can do your own strategies, build your own and back test them all you want, but these are proprietary. You don't have access to them.
You'll notice that in the reds that say stop hit, stop hit, stop hit, they equal $100. So the calculation basically works. The amount of shares the AI chooses to display for your particular custom setting will always equal that amount in that setting if you choose that when the stock does hit a stop out.
Yep.
All right, good question from Kelly. So what I'm going to do, we're going to go to the trade of the week, which we'll get to in a moment. But the last four are still working pretty darn well. Roku, which is interesting, we gave that one out as a trade last week. We'll kind of come back to this one, but this was the original setup down here that we liked. I don't have my 10-period moving average filter yet, but that's kind of the stuff I'm going to start scanning for, stuff that's breaking the downtrend, running flat above the 10-period moving average, flattening and starting to move up, but a nice peck on the hand first before it flies. Still looking to go to that scan, but that is the Roku. It is still moving higher. So what you can see what happened is here, you get those nice pushes, and then you have a week of just congestion and base building, and you build a higher base, and that's exactly what the bulls want to see. As a matter of fact, this could be setting up for, I don't know, that'd be a lot to ask, but big long candle followed by a doji candle sometimes can be preceded by another or followed up by another long candle, the go pause, go setup. But nonetheless, Roku from a month ago is still working pretty nice. I want to check in with X because X was 3 weeks ago, and this one just triggered. It actually triggered, but we talked about no harm, no foul. It triggered here, roughly, but the stop was down here. So, this is no harm, no foul land. Just tend your garden. Like I said, you look down, it's not doing anything. All right, there's no reason to change your mind, but all of a sudden, it starts to find its sea legs and its footing. Oops, over here, and it broke out, and most importantly, has posted 1, 2, 3 closes above this very important 50-day moving average. So that's what I'm seeing over there in X. I'm seeing good stuff. Wouldn't be surprised to see these moving averages start to really fan out, get that 10-period up here, and before you know it, maybe 2 or 3 more days, the price action of X might catch that 10-period and make another move. That's what.
Although, Steve, we need to warn them in case anybody's
October
thinking 31st. About it. Yeah, tomorrow or something.
Reminding me. No, Thursday. Well, tomorrow you need to be out because Thursday, no, it's post-market. I thought it was pre-market. So Thursday, you got 2 more days basically. And unfortunately, let's just call it like it is. The way the market is these days, unfortunately, you got to kind of, if you really have belief in the long term and you have the right size of amount of shares and you want to be a position investor, you got to sip your earnings sometimes. But if you don't want to be that person, you just want to swing trade the movements, you got to get out before earnings, because what happens is the risk is consummate to the reward. It just seems like more often than not lately, these stocks are making people go into earnings to get part of the big move. They just don't do it before earnings. So there's always that risk. All right, good to know. Kelly's going to be taking the test drive, which is always important. November 11th, good day, 11/11. So that was X. X is now showing signs of life. We like that. It's germinating, for lack of a better word. Hey, a garden term, look at that. Garden term, it's germinating, and now we're going to water it and tend it to make sure it doesn't get eaten by the rabbits. Last week was Lyft. And Lyft is running right smack into earnings. Had to get out of Lyft today because October 30th. I don't want to stick around tomorrow. Look at this nastiness. The 50-day moving average. Tell you it doesn't make any. I would tell you it doesn't. I don't know what I was trying to say there. It does make a difference because the market is watching it. It made a difference on that day. It made a difference on this day. Couldn't get a close above it on this day and couldn't get above it again today. 4 days it couldn't get above the 50-day. So what makes me think tomorrow, the last day before it goes into earnings, maybe it will, but I don't know. It looks like it's just time to take the best that we could get out of it. And again, it was that 10-period moving average I'm kind of slowly waiting on. There's the price break above. 10-period moving average flattening out, and right there, that is the algo reversal. Comes back and pecks on the hand and then makes its move higher. And so in the near future, I hope to be having a webinar on something that we can actually look at and share that'll start to identify these types of setups that we've had in the last few weeks with Roku and Lyft alike. But we need that filter first. So now it takes us to Nike. So I got to admit, I was very much entertained, as I was hoping, by Jeff Mackey's discussion and talk at our summit this weekend. Very interesting guy when it comes to retail. He just knows his retail in and out, and very entertaining as well. And a couple of stocks he really likes. He just doesn't care what's going on in the news, and I agree with him. It's just, what are the technicals telling us? Forget what people are doing. But he loves Nike, and that's one of them. But that's the point is, it's not to run out and buy Nike because Jeff Mackey likes it. It's to wait until the footprints in the sand tell us it's a time to buy. So what I'm looking at here at the moment is the way the stock looked going into the weekend. And what I would normally be interested in is this level right here, below these. We talk a lot about the algos, and we're going to talk a lot about algos here. A case could be made that, yeah, we could have come down here and threatened that level and bounced up, but I think that would have been premature, and it turned out it was. So we don't do these very often, but this was a pullback alert. It wasn't a breakout alert. We are trying to let these people get the punishment up here and take something off their hands if they're short-term oriented, and see if we can get something. So now forwarded 2 days here, and the reason we picked this level, there was the high back here, 89.40, and we were eyeballing where this moving average was going to be coming into here. So we just kind of came up with this level arbitrarily of whatever it was, 89.50, 89.60, and it triggered today. Now let's go ahead and just kind of look at what happened here. Yesterday, it might have been really easy to go, and this is where I've been. This is one of my biggest problems, guys, is I forget to respect the space that's still there. That makes a lot of sense. Yes, it kind of tried to lift some of these lows, but didn't really do any damage. To do some damage, it needs to get down here into this gap and run some stops and respect this 50-day moving average. So the good news is that it didn't trigger yesterday. It waited for today, and it kind of gave us that look of that second mouse gets the cheese. A bit of a reversal candle, but it was still premature. The point being, I'm learning I gotta respect this space, because these damn algos, they love to go down there and clip those levels, and then they can reverse the if-thens by programs. So we'll go forward one more day, and now we're at today. Let's see, oops, my program just locked up, Andy. There we go, downloaded the new version. And here we are today, and look at that. We not only tagged it, but went through it. So I wanna go through and look at the intraday, because this is where it starts to get interesting, especially on pullback alerts, okay? So here's today. Case could have easily been made to jump in and say, oh, look at these two candles right here. Actually, let me back up, because it would look better if we just did it that way. All right, so we come down here and we go, oh man, it's bouncing. But no, this is our target down here. At this point today, it still wasn't touching the 50-day moving average. So it's hell bent on getting down to that bogey. There it is. It went down and touched it, and then immediately, look at that. Everybody else, or I should say every other server farm, saw what we were seeing here, and the buyer stepped in. But it wasn't enough. It would have been nice to see it bounce then. It would have been probably the cleanest entry ever, but it didn't. These entries can get a little sloppy. Now I want to add this level right here. The low is 89.46. The 50-day moving average today is 89.35. So did the algorithms get their target? Nope, they still missed it by about 12 cents, I think. So here we come, the end of the day. There's the trigger right there. So there's the low, I believe. No, this was the low right here. 89.26 broke through that 89.30 level, basically where the 50-period moving average was, and then the buying jumped back in, and then the market closed with a little bit of squaring up here of the market making algos at the end. And look at that, a little bit of lift after hours. We're back up to 89.43. So all in all, I'm really happy with the way this trade worked out as it triggered, because it didn't trigger and blast through like trying to catch a knife. Now, I might also add, you probably don't want to come into these types of trades when we have a pullback alert like this and go full bore 100%. If you're going to buy a 5,000, amount, maybe you come in and buy 2,500 or 2,000 to start with, and then just kind of watch and see what happens down here. Well, tomorrow I'm hoping tomorrow there might not be much of a chance to grab the offer and buy some, because hopefully tomorrow on the open it will completely reverse. So we'll learn a lot about what's going to happen, I think, early on the open. Also, don't rule out the possibility of today's low right here just being taken out just because they can on the open again to roll and see if there's anything underneath there, any stops that can be run. But all in all, I think when we can all agree when we look at a healthy stock that Jeff Mackey really likes, and if he told us he liked it back here, we'd probably be a little mad at ourselves for running out and buying it because he liked it. But when we put it on our radar in the bigger picture, all of a sudden we let these people who bought here after earnings, this is kind of like the swing trade chapter I wrote, you know, it goes up and then all those people, and Brian Shannon would call this an anchored VWAP. I don't have that information, but it would be fun to see where the VWAP is as it relates to the people that bought after earnings. It's a good story for another day. But the point being is it's much nicer to grab an entry down here than it is to chase one up here, because it feels like there's a reason for the buyers to step back in. If we're wrong, we're wrong. But if we're right, then it's much easier to risk one to make two on these type of contrary entries than chasing new highs. So that's my theory and my thesis on Nike. I'm glad it triggered, and I'm glad it kind of held that level. I'm happy with the way it traded. The intraday price action here at the close gave me really no concern at all. You got any thoughts over there on how this one traded, Andy? Or anything at all on it?
No, I mean, it's what you got to do sometimes, especially in this market. We're finding it, I don't know, it's a lot more profitable at times to, you know, look for these areas, these entries. And like Steve said, it is important when you are, you know, going against the herd, or should go against the momentum, which is down right now, to take a partial size, whether it's a third, whether it's a half, or, you know, whatever it is. But for swing trading, yeah, I love entries like this. Now the thing is, you got to manage them. If you're wrong, does it bounce? You know, you got to adhere to your stop and get out.
Let's see if we can get it to germinate.
Yep, there you go. I like that.
Germination. All right, so let's square up my out here, and we want to go look at sectors, which I haven't done yet. So we will all do that together for the first time. And usually, when we do this exercise, we can come out of it with maybe 2 or 3 ideas that look interesting tomorrow in terms of the sectors. So let's do that right now. Let's actually pull this chart back out and get a bigger view. All right, so we'll start with nat gas. That was the strongest today. We're just going to stay away from nat gas. It's a very crazy, gappy, silly ETF. Interestingly enough, oil is kind of doing what I was talking about here. The old sideways action resting on that 10 period. Oil looks interesting. Oil, I pecked the bird in the hand this morning. You know, that could be interesting. We'll keep an eye on that. What's this, healthcare? Oh, interesting. In the bigger picture of things, healthcare is running right into resistance, but notice the technical path in which it took, consolidation sideways, touched the 10-day moving average, and then shot up. That's kind of interesting. Well, gold has been really weird lately, so the gold miners have been kind of congested as well. There's, you know, there's a case to be made. They're kind of building a nice rounded base here, and we'll see it when we see gold in a second. But they're still in no man's land for the most part, and there's another one. Again, the 10-period moving average kind of pushing the biotechs, and the biotechs peaking through a significant 200-day moving average, but I'm just going to say it, I hate the biotechs. I don't really ever pay attention to them. Here's the banks respecting that moving average, fanning out. Moving averages are spreading out nicely, but running right into resistance there, it looks like, from prior. So, you know, I'm looking more for congestion and a breakout, kind of like that oil, and kind of like this. Energy and oil are looking rather interesting here. They popped up, they've consolidated, and they're moving sideways, not giving a whole lot back. So energy and oil look interesting. I think the banks and the financials are running into resistance. We did the IWM already. Financials are the same. Let's forget the treasuries. The treasuries are looking technically weak for whatever that means. Interest rates, you know, price continues to fall, interest rates might firm. Now steel, this is interesting. This is why X kind of popped out of its base the last couple of days. So SLX is putting in a lower high here. Interesting little possibly bottoming action. But the biggest test of all for X and all the other ones combined is going to be, can we look back and see all these failures at the 200? And so it just begs the question, what's going to happen here when steel gets back there? It probably will, but what's going to happen when it gets there? Maybe we'll be on top of it when it does. Solar's just a mess over there. Software index, nothing really to write home about there. Now we're getting into the stuff that was negative today. It's the agriculture, very thinly traded. The broker dealers in no man's land. Kind of a little teepee top there in the REITs. The REITs had a really nice breakout, but they've given all of it back. It's interesting. We've done the Dow, we've done the spiders. Now silver tried to break out. You know, last week it looked like there was kind of an interesting move, but we'll see what happens. Monday and Friday they gave a lot back. Benny and the Jets. Gold also, same thing with gold. What I noticed, and I thought they had it back here. They still might, but that gap up was looking pretty good, but they've given a lot of it back. We'll see what happens. Oh, good, I hear the lawnmower man coming. Oil, let's see. Well, it looks a lot different than the oil services. Semis, we talked about that. Do not buy semis when you see this. This was a nasty move down here, but nonetheless, the move now in semis is probably over for the next few days. So if you're looking to establish a new position, I wouldn't. Home builders, we looked at a couple over the weekend, but this tall wicking top tail has turned out exactly as we thought. We took the home builders off any trade of the week type of scan, but that topping tail after a big long run has been given a lot back. NASDAQ, we looked at NASDAQ, same with the technology and retail. Well, Nike is going to be subject to retail, so we'll keep an eye on that if you're long Nike, but interesting, still in the trend. And that's about it. So it looks like energy and oil service kind of had the most interesting congested type of setups that could, you know, be something interesting in the next day or two. So we'll see. And then, you know, gold and silver could be interesting, but the problem with those markets is, and Andy knows, is they're overnight markets. They're 24-hour markets. It's really hard to play if you're on the wrong side and you wake up the next day of a gold miner or a gold commodity, and you really couldn't do anything about the overnight gap down or gap up if you're short. So that's a good look at sectors. Pull this out. So what I'll do next is we set a few alerts last week, and they did trigger. Let's take a look at them, and then we'll clear it out. Well, there is Roku. We looked at and we talked about how much I like that that setup there. I'll be completely honest with you. Andy knows I was long Roku, and I got spooked out because I didn't wait for the candles to close. I got all wigged out midday, which is a problem. So got to remind myself it's a long day. You can't make intraday decisions. But nonetheless, it did trigger yesterday right at the trigger level. The gap was a perfect level, and good day and a half of push through in Roku. CLDX also had a pretty decent push, although it gave a lot of it back on the close. What else? Oh, this is our trade of the week, which wound up in there. It wasn't given out last week, but it was to signal to me that it popped up to buy some. Siri, horrible chart. This one's, I don't know why I trust it sometimes. There's 4 billion shares in the float, but it didn't follow through with a nice cup and handle like it could have. And the last one that triggered just kind of peeked its head up and didn't give us much at all. So we got to, like Andy said, tend the garden, or like I said. All right, so let's delete these 7, and we got a little bit of time here. We'll create 7 more that I looked at and found kind of after market. Just minimize that. So the first ones from the A table are, I'm not going to bother trying to find it. I'll just type it BKE. Hopefully it didn't close like crazy. And of course I checked the earnings on all these already. So what do we like about BKE here? Let's, ooh, look at those moving averages, all nice and pretty. And the price action is being supported by the movement, and so if it's on the A table, we know that it's a quality stock. It's got a good score and even some short float to boots. I don't know where it went. The short float on this one is, wow, 48%. Are you kidding me? That's 5. This is the one I'm gonna like this one the most, actually. I like this one the most. So I'm gonna go to the intraday chart here and just see that that looks like today's high. We're gonna put it right above there. That'll be our trigger. I'm going to remind people, big short float. And the reason that's important is it can propel the price even with more energy if the shorts are panicking and the short sellers are trying to get out. they are competing with the buyers trying to get in. That's what we want. It's a good looking setup. I like that one. All right, the next one would be, a lot of notes here, KMX. We're in earnings season, December 20th. We're good there. And the only thing I don't like about this is see the spikiness. Every time these candles get up close to that, they get repelled. But at the same time, what do we have coming up underneath? And I'll put my money on the fanned out moving averages coming up underneath more than the individual little spiky candles. It's probably just what they're doing. So another nice looking flag, another looking consolidation there with a stock that has, let's see, 13% short, not as bad, but a nice score of 87%. Look at the intraday action here, and we're going to put the alert right above this guy right there. All right, so the next one, I believe, are from some other scans. AGO, this might be Andy's wedge, or your bull flag setup. Looks like it had a decent close. I'm just going to do follow through from today. So we'll just look at that high, and we'll just eyeball that from today's high. November 7th. Still have a good week or so, week and a half. Then we've got L, which is Lowe's Corp. Lowe's just had earnings 2 days ago. And look what Lowe's did. I got this one off of the washout bounce. So the spiky candle this morning. Yesterday was earnings, so all the bad news was out yesterday. And more bad news bled out today, but it all bled out on the open and gave us one of those nice little spiky candles. So I'm going to use today's high as a trigger, plus a couple pennies. Earnings are behind us, so no need. I can actually grab this, you guys, and eyeball it a little bit closer. Today's high as well. There we go. And then also from this washout bounce scan, I believe, also came Kroger. Oh, is it locking up on me now? It might be. Is it doing this to you, the new development version, Andy?
And you did, you know what? I haven't. 108.
Yeah.
Yeah, I haven't. I still on 107. I haven't got around to it yet, but
There it comes.
there it comes.
Kroger.
Seems like it takes about every time.
Yeah. So Kroger had it's having earnings in December. We're good there. Really nice washout bounce today. All the moving averages are really converting here. I'm just going to say when I see these washout bounce candles, I just like to put them on the high of that actual candle, and that has been a decent way to try and get some follow through for a few days. See if we can get that. Then we're going to, I think we already did AGO, didn't we?
Mm-hmm.
So the last two are, this one's going to be the most speculative of all. NAT. Andy noticed that the shippers were doing something interesting. Look at that. Earnings November 25th. We're good there. The volume, the big move higher, and look at this. It has not given much of that back. Fake move out off the 10, and then a slam down reversal. But now here comes that 20, and if that 20 holds and gets back above this can, I'm going to zoom back out a little bit on the intraday. And I'm going to use this level right here. If it can clear that little double high intraday, we're going to call that now. It's speculative because these are, over-the-counter stocks, and these are shippers, and shippers can be notoriously nasty. But why not? We got to throw a little something spicy in there. And the last one is KSU. Again, I think this is a pullback. I can't remember where we found this one, but what I'm seeing here, this is probably earnings. Let's take a look. Earnings was, October 18th. There it is. So there's the gap up. This one is really coming close to, again, that it's not on the A table because it's got, what score does it have? It's got a score of 78. So it's a C+ student trying to get into the B students. But technically, at its earnings, gapped up. It's given most of that back, but here comes the moving average. And let's see, did it touch it today? Got pretty darn close. I'm going to go back 2 days like we usually do on these, and that's the high of 145, 48. 48 is going to be our price, which is the high of 2 days ago, 47. So if it can clear that, that means that maybe this little area is acting as a springboard, and we can get that 10-period moving average to get the price to get back in line and move higher. So those are the only 7 that I have. So let me go ahead and collect those, and then I can send them out. And then we'll be ready to bring in Scott, unless there's any other questions. If you guys have any questions, we don't make, yeah, David, that's why I prefaced it. Actually, let's do that. Thank you, David. Let's go in here and remind everybody. We're going to edit the price alert. We're going to remind everybody, shipping stocks can be volatile. So be aware. All right, so let's go ahead and highlight and share these 7 selected alerts. Copy. All right. Open up the chat window. And like I said, if anybody has any questions right now, you can throw it in there. Otherwise, we'll bring in Scott. Price alerts, paste. Okay, let's see. Randy's got a question. How do you get the earnings date to come through as an actual date? You need a newer version. So Randy, go to the Trade-Ideas website. On the download page, scroll down to the bottom. You'll see a beta version down there. And yes, it's a much more user-friendly version to see the date, pre-market, post-market with a date. So you just need to get the new version. That's all you got to do.
Mm-hmm.
John, great summit. Wish you could have made it there. Yeah, if you haven't seen it yet, John, the guys behind the scenes are working on putting up an edited version back up on YouTube, and it'll be real good. As soon as we get it up, they will email people and send that notification out. Frank says, can you use trade ideas for Forex? Just stocks. Forex is a completely different animal, Frank. That's a binary market. Not even close. So we scan US equities and some Canadian equities. You were on the live stream. Hopefully it was okay for you, John. They switched internet providers on us last year. We didn't even see that one coming, unfortunately. But for people that may not have seen it, we're going to get the edited version back up, and you can see what you missed. All right, so there's no more questions. Photoshop or video editing on my hair? No, it's real hair. That's funny. All right, we don't want that. We want to bring up this. And let's bring in Scott.
Yeah.
And with some outbound announcements. All right.
Yeah, you can move on from that slide. Forgot to remove it. So we got a series of 3 ebooks out. Tradeideas.com/setup is the place to go to get them. There's 3 books, each with 2 chapters. Includes cloud links. They were written by Steve and Andy and our other guys. So real good stuff in there. It's free. Just put your email address in the form at trade-ideas.com/setup and they will get delivered to you. We got a podcast. Usually release new episodes on Fridays. So search for Trade Ideas Podcast wherever you listen to your podcasts and add us as a subscription. Get ready for the next step. It should be this Friday. So stay tuned for that. There's a code good until this time next week. Save on Ideas. It saves 15% off your first month or year of Trade Ideas. You can also use this to upgrade from standard to premium. So if you're a standard subscriber and you want the goodies in premium, just go to the account management section and use that code on the upgrade change plan page to get that savings on your first installment. You can follow Steve Gomez on Twitter at TodayTrader. Also, we have at Trade Ideas and at Crackpot, a few other handles. Facebook.com/TradeIdeasPros, the Facebook page to like and share stuff posted there with your friends. You can contact customer support. Info at trade-ideas.com is the best place to send your questions. It gets answered by the appropriate team member when it goes into our help desk software. So it's a good place to send all your queries. We're going to have this recording up later on tonight or tomorrow. You get an email reminder about how to find it when it's available. So thanks, Steve. Thanks, Andy. And friends, have a good one.
All right. See you next time.
Thanks, everybody. I'll see you on Thursday.